Chapter 18, The Charge Card Dilemma. In January 1992, Visa International issued a report saying its services had evolved from a credit card company into a full-service customer payment system. The report also indicated that the company's goal in the coming years is to become the preferred customer payment system for virtually every type of customer transaction. While those claims and predictions might seem grandiose, in the United States alone, general purpose credit cards are already used to purchase $250 billion in goods and services annually. Furthermore, the goods and services that can be purchased on a credit card now include not only items such as equipment, clothing, and travel miscellaneous supplies, but also food and medical and dental services. As a result, any business that sells customer goods and services or that sells goods and services frequently charged on corporate credit cards is at a disadvantage if they cannot accept credit cards. As Dennis Moganon, owner of Maxwell Street Pizza in Hemet, California, puts it, the more I sell, the more I make, because I am so much like everybody else. I too place myself so that I can sell more than the guy down the street. Or if I cannot beat them, I have to at least join them. The Me Too Club. Accepting credit cards falls into the Me Too category. As convenient as it may be for people to charge purchases on credit cards, the widespread use of credit cards presents three major problems for small businesses. They have extreme difficulty in finding a bank or other reputable credit card processor willing to grant merchant status so that they can accept credit cards. They are easy prey for unscrupulous salespeople and con artists who either charge exorbitant fees for finding a source of merchant status for the business or just take healthy application fees and disappear. Very small businesses are at risk for catastrophic losses if they are hit by a rash of charges on stolen credit cards. Although there are no guarantee, by arming yourself with the facts in the chapter you stand a chance of avoiding the pitfalls in obtaining merchant status and processing charge sales. Won't it cut into my profits if I accept charge cards? Accepting charge cards will increase your cost of doing business, since you will have to pay the credit card company a percentage of each sale and are likely to also have to pay an additional flat transaction fee plus some flat monthly charges. Thus, if you have a very low profit margin, you may want to increase your prices overall to offset the credit card fees. You may find, however, that your sales volume and the dollar of each sale increases more than enough to offset the fees you pay the credit card company. In addition, if you have been used to billing customers and waiting 30 days or more for payment, letting customers charge purchases could reduce your billing costs and improve cash flow. You shouldn't expect to clear up outstanding bills by gaining merchant status, however. It is against credit card company rules to let customers charge unpaid bills to their credit cards. Only new purchases can be charged. Merchant status is a term used to indicate a business is authorized to accept credit cards and payment for goods and services. A business with merchant status will have the charges processed through their merchant account with a bank or other credit card processor. Credit card companies and banks use the term merchant to denote any business that accepts credit cards. Finally, keep in mind that after achieving merchant status, some businesses find little improvement in sales, and a few actually lose money due to credit card fraud or consumer abuse. How long does it take for the credit card company to pay me when I accept charge cards? How soon you get the money will depend on whether funds are transferred to you electronically, held for a time against possible chargebacks, are mailed to you in a paper check. Generally, however, you can expect to get paid within 2 to 14 days. How do I go about accepting credit cards? To accept credit cards, you will have to apply for merchant status, also called a merchant account, through a bank or other financial institution, an authorized independent sales organization, the ISO, or the credit card company itself for certain cards. Once you are granted merchant status, you will need to buy or rent a device for imprinting or electronically processing the credit card. Do I need a separate merchant account for each credit card I want to accept? American Express and some other credit card companies require separate accounts, but Visa, MasterCard, and Diner Clubs can often be processed through a single merchant account. The company or financial institution giving you the merchant account will be able to tell you which cards you'll be able to accept on your account. Where do I go to apply for merchant status? If you have been in business for 2 years or more, your business is not home-based, and you don't sell mail order, you may be able to get merchant status through the bank with which you normally do business. If you are a small mail order company, run a home-based business, are new in business, or operate certain type of businesses, your regular bank may turn down your request for merchant status or not even be willing to talk to you about it. Can I get merchant status without going through a bank? You don't have to get merchant status directly through a bank, but getting merchant status elsewhere may not be any easier. The owner of a home-based mail order company in New York says he called every single bank and S&L listed in the borough of Queens, and then called all the places that advertise in the Sunday New York Times. These calls, he says, produce one of 3 results. Either they said they won't deal with mail order and or home-based businesses, or they quoted me outrageous prices, or they insisted that they had to come down to my home and explain the whole service to me and then give me a price. Why is it so difficult to get merchant status? Don't the banks or other companies want my business? Banks want business, but they don't want risky business. And home businesses, new businesses, and mail order operations all look like high-risk operations to credit card processors. Here's why federal laws give credit card users broad protection against unauthorized use and unfair credit practices. As a result of these laws, credit card issuers act as intermediaries in disputes between the consumer and the merchant. If a consumer claims they did not make a purchase or that a purchase item was inferior and the merchant won't replace it or refund their money, the credit card company refunds the cardholder's money in most cases and charges back bills the merchants for the amount of the refund. While merchants are supposed to be given a chance to prove the purchase was actually made or the goods were satisfactory, merchants say that doesn't always happen. If the merchant is very small, or as home-based operations often are, the company may not be financially able to make good on chargebacks, particularly if they are hit with someone buying merchandise with one or more stolen credit cards. If they go bankrupt or simply close their doors and disappear, some fraudulent businesses do, the credit card issuer has to absorb the loss. In addition, under Visa regulations, if the percentage of the Visa chargeback to a merchant account goes over 1%, the merchant bank may face stiff fines or possible loss of their ability to process Visa cards. The Truth in Lending Act and the Fair Credit Billing Act both contain regulations affecting credit card use and billing. Why do banks object to giving legitimate mail order businesses merchant status. Mail order businesses are particularly risky from the credit card processor's point of view because the company selling the merchandise never sees the customer, does not get the customer's signature at the time of the sale, and has no way of determining for sure that the person calling in the order is actually the owner of the card. Anytime you don't have an imprint of the card or the electronic equivalent as a signature, you take 100% risk on the sale, says Tim Pfeiffer. Pfeiffer is in charge of the MIS function of Teleflora Credit Line, the merchant service division of Teleflora Incorporated, a company known to many people because of its floral wire service. He also worked in the company's customer service division. Are there any other circumstances that might prevent me from getting merchant status? Credit card processors are not going to want to give you merchant status if you have a bankruptcy on your record, tax lien in effect, or accounts that have been written off by a lender. No bank will grant me merchant status. What should I do? One option is to leverage your way up to the credit card status ladder. North Carolina entrepreneur Ben Mandel, who turned a single 1-hour Photoshop into a successful chain with more than 30 locations, suggests starting with American Express, which has less stringent requirements than some other companies that grant merchant status. Tell them you want to establish a merchant account. He says, then after you get it, approach Discover Card and then tell them the same thing. Wait a few weeks after you get merchant status with Discover Card services, Mandel says, then call back and tell them you also want to process Visa and MasterCard. Is there any more direct way to get a merchant account for Visa or MasterCard? There are numerous companies called Independent Sales Organizations, the ISOs, that are authorized by credit card companies to serve as intermediaries between merchant banks, banks that process credit cards, and businesses that want to accept charge cards from their customers. As the word sales implies, these companies sell credit card processing service and within certain limits can sell their services for whatever the market will bear. Many also lease or rent credit card processing terminals and provide other services such as check verification systems. I've heard stories about business owners paying steep application and other fees and sometimes still not getting merchant status. Does that happen a lot? Unfortunately, merchant status is sometimes so difficult to get that the small merchant becomes easy prey for opportunistic and unscrupulous salespeople. I swear these people blow into town with the wind, says Daniel Moganon, the California pizzeria owner. Maganon had wanted to accept credit cards in his restaurant, but was turned down by his bank because his business was too new. But then one day, he says, this guy comes into the store and asks to see the owner. He said he can't get money. He can't get me not only. He said he says he can get me not only merchant status, but also an electronic reader and printer. Well, I saw the clouds part and heard the Mormon Tabernacle Choir singing the Hallelujah chorus. But it must have been just a recording. $300, and 4 weeks later, I was regretfully informed that I'd need to reapply after I had been in business longer. When Moganon asked about the partial refund he had been promised if his application wasn't approved, he was told, "We are mailing it today." A week later, when the refund hadn't arrived, the response he got was, "Oh, we are sorry for the mix-up." A week after that, says Moganon, the only response was to the telephone company's recording. "We're sorry. The number you have reached is no longer in service." Moganon was understandably furious, but not long after the first salesperson disappeared, Moganon says this other guy Blows in the door. Did I learn my lesson? Did I? No, I wanted merchant status. This new guy wants money, so I start sorting my payables list through my mind and decide if my kids want to eat. They are going to have to go out and get jobs. Hey, I am looking at the future. I plucked down my fee, filled out the application. He took Polaroid pictures of the business, but this application didn't pan out either. Eventually, Moganon did get merchant status and without losing any more application fee. I just flat out told the last guy that he was not getting so much as a penny until I was approved and the equipment was up and running. Unfortunately, Moganon's story isn't usual, nor is it the only way unsuspecting business owners get taken into their quest for merchant status. Some sales agents actually do come through with merchant accounts, but then charge exorbitant transaction fees, monthly fees, and or equipment fees. Some business owners are actually talked into paying discount rates as high as 8% on each transaction, plus an additional flat fee of $1.25 per transaction. Many get talked into signing non-cancelable contracts requiring them to pay $3,000 to $4,000 for equipment they could purchase or leave elsewhere for less than $1,000. How should I expect to pay to apply for merchant status? Fees will vary by how new or risky your business seems to the credit card processor with which cards you are processing. In late spring of 1992, application fees were running on the average from $100 to $300, but some sales agents were charging over $700 to take an application for merchant status in 1992. Some ISOs were also suggesting merchants alert them ahead of time if they think they might be a reason, such as bad credit history. The processing company might turn them down, says Teleflora Tim Pfeiffer. We are not interested in declining applications at $100 apiece and will be happy to discuss your situation ahead of time. But he adds, once you actually do submit an application, the fee Telflora charges is $100 in June 1992 will not be refunded if your application is turned down, since the company has to order credit reports and incur other expenses to process the application. Why is there such a large discrepancy in fees? ISOs have to order and pay for credit reports on applications and have to pay employees to review applications and credit reports. Thus, they often charge an application fee to cover those costs and to discourage applicants from people who have little real interest in achieving merchant status or who know they are unlikely to get merchant status because they have many delinquent accounts or have defaulted on loans. However, since an ISO actual cost to process an application should be well under $100, fees much over $100 are likely to include a fair amount of profit being made on the application process itself. Much of that profit is likely to go to independent sales agents rather than to the company the sales agent represents. In such instances, the sales goal may be to take as many applications as possible so he or she can make as much money as possible, regardless of whether or not the ISO is actually likely to approve the application. How much should it cost to buy or rent the terminals to process the cards? Fees vary with the type of terminals, but average prices for specific electronic terminals used to process credit card purchases range from $500 to approximately $700. Printers that work with the terminals are about the same price. According to one industry insider, sales agents often make a profit on terminal sales or leases as well as application fees. Thus again, the higher the fees, the more the sales agent may be making on the equipment. What kind of fees should I expect to pay on each sale? Discount fees, the percentage of each sale the credit card processor takes out before giving you your money is ranging from $2.25 to 3.25% are common. However, some ISOs charge discount fees as high as 6 to 8%. The per transaction fees from ISOs with the lower discount fees were averaging 20 to 25 cents. Agents selling higher price services were charging up to $1.25 for each transaction. Fees from the better ISO depending somewhat on volume and choices of payment method too. Companies that had a high volume of transactions and were willing to wait 2 weeks to receive their money from the ISO were able to get slightly lower fees than low volume businesses that opted for 2-day electronic deposits of funds. Many ISOs were charging monthly minimums or a flat monthly fee, and chargeback fees. If you have a printer that ties into your terminal, you will also have to pay the cost of the special paper and ink cartridge or ribbon, which you may have to purchase through the company renting the machine. Some processors require merchants to have reserve accounts, money set aside to cover chargebacks, and some were demanding the option to be able to electronically withdraw funds from the merchant's bank account as well as to deposit them so chargebacks could be immediately collected from the merchant. One other thing to watch out for are exceptionally low discount fees, which are actually occasionally used to get merchants to sign up, and then after they do, the discount fees or other charges go up significantly. Is it even worth paying much higher than normal fees? Certain kinds of businesses find it particularly difficult to get merchant status because of the nature of the product or service they sell. One ISO mentioned not dealing with limousine services, escort services, or companies selling adult products. Another mentioned not accepting multi-level marketing companies, business selling water filtration services, devices, and certain kinds of telemarketing services because they tend to either disappear or have a high customer dissatisfaction rate and therefore a high chargeback rate. In addition, many ISOs won't grant merchant status to a small business if the owner has a poor personal credit history. If you fall into any of these categories, you may have to pay high rates to find a third-party processor willing to take a risk on your business. However, you shouldn't be willing to do so until you have the first approved several other sources for merchant status. What one company won't accept, another may. Additionally, your bank considers a poor credit history may not be considered that bad, as one ISO representative put it to a third-party processor. Finally, be aware that paying a lot of money to someone who promises to get you merchant status does not assure they will deliver. As mentioned above, there are independent sales agents whose only goal is to take applications. There are also some that require a high application fee, and instead of getting you your own merchant account, try to hook you up with fulfillment a company. The owner of a home-based software company in California paid $750 to a sales agent who said his fee was refundable. What he provided for the software company was not the merchant account the owner wanted, but a fulfillment service that wanted to charge several $100s a month in shelf fees to store product inventory and process orders. The company also wanted the authorization to withdraw money at any time for any reason from his bank account. Couldn't I avoid all these hassles by having a friend process my charges for me with his number and giving him a percentage of each sale? No, This practice is forbidden by credit card companies because of the potential for fraud. Even though your operation may be totally legal, if the credit card company discovers what's going on, your friend could lose merchant status. Generally, only two kinds of business companies want to have their cards processed this way. Those that can't qualify for merchant status on their own because of their business is risky, and fraudulent businesses. The way the latter type operation operates is that a con artist will pose as a new merchant and will make contact with existing merchants in town, saying how difficult it is to get merchant status, and often the other merchant and offer the other merchant a percentage of each charged sale. The con artist will then submit phony orders, duplicate orders, or advise some kind of bargain and have the calls go to the established merchant. He or she collects the money from the merchant, then skips town before the scam is discovered. The result, the helpful merchant has to make good on all the chargebacks to his or her merchant account. On the flip side, once you do achieve merchant status in your own name, you should never let anyone talk you into processing their charge through your merchant account. How does having another merchant process for your charge differ from what an ISO does or from what a fulfillment service does? The primary difference is that the bank card company knows about the arrangement and has authorized the company to act as a third-party processor or to take your order. If you are unsure whether a company is legitimately able to process charges for you, ask whose name will be on the bill the customer receives. If it is the other company's name and they do not store your inventory and ship your product to the customer, you should be wise to try to get the name of their merchant bank and verify through the bank that the company does have an authorization to process charges for other merchants. Is there any good way for a new or home-based business to get merchant status? Teleflora Tim Pfeiffer recommends you start with your own bank. Since some banks in some communities will work with small and home-based businesses, if the business owner has a long-standing relationship with the bank. If the bank can't grant you merchant status, says Pfeiffer, ask them if they can recommend a third-party processor who will. If the bank can't refer you to anyone else, ask other business owners in your area who their merchant card processor is and what their experience has been with the company. Other good source of information may be associations or business groups to which you belong. The Direct Mail Association and the Association of Shareware Professional and some local chambers of commerce are just a few of the groups that are able to suggest reputable third-party processors to their members. Be aware, however, that if you are a brand new home-based business, you may have a great deal of trouble getting merchant status. Finally, many business people who have had bad experiences with some third-party processors advise that you be sure to get copies of read and understand every paper you will have to sign. Watch out for hidden processing fees, shelf fees, extra monthly fees, and non-cancelable and generally lengthy equipment fees, leases. Also, be wary of salespeople who will sign forms saying they have inspected your premises when they have never set foot on your property or in your place of business. I really don't know any business people in my community and don't belong to any associations. Where else can I get names of companies offering merchant status? If none of the local contacts can help you, you may want to contact one of the bank card companies or third-party processors listed below. Each of these companies have some restrictions and has different fee structures and requirements. Make sure you read and understand all detail of any agreement you sign with these other companies. Charge card companies: American Express, Merchant Service Division, 1661 East Camelback Street, Suite 300, Phoenix, Arizona, 85016, 800-528-5200. Press 0 when you hear the recording. Discover Card Services is P.O. Box 28541, Columbus, Ohio, 43228, 0541, 1-800-347-6673. Bank: Indiana National Bank, Merchant Service Division, 1 Indiana Square, Indianapolis, Indiana, 46266, 317-266-6000. The bank indicated was offering merchant status only to Indiana businesses and a few businesses in the gift basket and software industries. Out of state: Independent Sales Organization, ISO, Card Acceptance Corporation, 9393, Activity Road, Suite D, San Diego, California, 92126, 619-530-1770. To Florida Credit Line, 12233 West Olympic Boulevard, Los Angeles, California, 90064, 800-325-4849, 310-826-5253 for Teflora Main Switchboard. U.S. Merchant Services, 9 East 41st Street, New York, New York, 10017, 212-818-1807. Little and Company, 54 Stiles Road, Salem, New Hampshire, 03079, 603-893-9333. Little and Company will not consider home businesses, but will consider direct marketers and mail order companies that are not home-based. The above list is by no means exclusive. It consists only of companies that were recommended by associations or were mentioned favorably by business owners who were using the services, were willing to answer questions about their policies over the phone, and indicating a willingness to work with a very small home-based and or mail order business. There were a few other companies I called that didn't appear very interested in answering questions over the phone, at least not after I tell them that I wasn't interested in obtaining merchant status for myself. One of those was an ISO that markets its services extensively and aggressively. A 21-year-old was contacted by this company so soon after he had registered his business name that he hadn't even gotten his sales tax number and issued to him by the state. Each time I called this particular company, an operator wanted to put me through immediately to a sales agent. When I explained that I merely wanted information, I was transferred to a company executive office and asked to leave a message. The executive never called back. As it turns out, many business owners had bad experience with this particular company. Typical complaint has mentioned numerous hidden charges, exuberant fees for equipment, non-cancelable 4-year contract, outright lies, failure to return copies of signed agreements, and difficulty in locating a real address or phone number for the company headquarters. One merchant actually had to close a bank account because of the agreement he had signed to get merchant status gave the ISO authority to make withdrawals from his account, and they appeared to be making withdrawals for services he had never agreed to purchase. This company has agents selling all over the United States. It reportedly operated under another name a few years ago, shut down operations under the same name due to a bad reputation, and reopened under a new name, using the same shady practices as it had in the past. Unfortunately, companies that use questionable practices such as this are likely to remain a problem for as long as merchants need to accept credit cards. To avoid falling into the trap, such companies take the time to investigate various ways to obtain merchant status. Compare what various ISO have to offer and don't deal with any company that won't answer all your questions and provide you copies of agreement it expects you to sign. Go over all contracts and agreements carefully and make sure you understand every word in them. Your best bet would be to have an attorney review the contract before you sign them. Finally, be sure to ask other merchants what rates and fees they are charging for processing cards and what bank or ISO they deal with. Compare what you are being offered with experience and proceed with care. Are there any dangers in accepting credit cards? The danger is getting hit by crooks who are buying goods with stolen credit cards, stolen credit card numbers, or counterfeit credit cards. By law, the credit card holder is liable for only the first $50 in losses if their card is lost or stolen, or if someone gets their number and makes unauthorized purchases to their account. All purchases above that amount, once the unauthorized use is discovered, gets charged back to the merchant who has to cover the loss even though they shipped the merchandise. How can that happen? If I ship the merchandise and it hasn't been returned, should I absorb the loss? The merchant is always responsible for verifying that that person using a credit card is legally authorized to do so. You are supposed to compare the signature on the credit card to the signature on the sales slip at the time of the purchase to verify that the other person using the card is a person to whom it belongs. You also are supposed to compare the number imprinted on the card to the number that shows up when a card is passed through an electronic verification terminal. Since there are some counterfeit cards being used that have one number printed on the card and the different number encoded into the magnetic data strip on the back of the card. If you are taking orders over the phone, it is impossible to verify signature or match numbers in this way. You have no way of knowing if the caller is the actual owner of the credit card and authorized to use it, or if he or she is using a stolen card or has obtained a number fraudulently. Until the person to whom the card was issued discovers the loss or unauthorized use of the card and reports it, all charges are likely to go through up to the limit of the card. But once the cardholders discover the unauthorized charges and challenges them, all the unauthorized purchases will be charged back to each merchant who accepted the card in the payment for sales. How much should I stand to lose? The amount can be substantial. If you sell high-priced merchandise, or if you sell the kind of products people order in quantity. California business owner John Ferguson, whose small company takes orders over the phone and then ships merchandise to customers, had to borrow from friends and family to make goods on a $14,000 worth of fraudulent charges made on stolen credit cards. He implemented procedures to screen out possible fraudulent orders, and during the following year refused to ship $25,000 in orders that seemed suspicious. Says Ferguson, I don't believe I have refused any legitimate sales. If I had, the customer would have called to complain that they never received their order and not one has. Is there any way to tell if an order placed over the phone is legit or not? Based on his experience, Ferguson says people ordering goods on stolen credit cards often share some of these characteristics. They will usually be placing large orders. They might insist their order be shipped by overnight delivery. This is so they know exactly when the package arrives. UPS guarantees 10:35 a.m. delivery, so they can be waiting to pick it up. They don't seem to care what the cost is. They want the item any price. They hesitate to give you a daytime phone number. They request the item to be shipped to an alternative address than the one listed for the cardholder. What should I do if an order does sound suspicious? Under any of the above circumstances, you should be particularly cautious and do everything possible to ascertain the person ordering the merchandise is actually the cardholder. These tips through non-infallible may help you decide if an order is legitimate. Get a complete name and address and phone number of the cardholder. Then verify the information you are given by calling the merchant bank, or using what other address verification system is in place through the ISO that processes your charges. If the address you are given doesn't match the addresses of the cardholder, don't ship. Only ship to the address of the cardholder. People ordering with a stolen card generally request the merchandise be shipped to a vacant house or apartment. Some shipping companies leave packages at the door if no one is at home. A person using a stolen card won't give you their real phone number. Find an excuse to call the customer back using the phone number he or she gave you and ask to speak with the cardholder. If you can't reach the cardholder, don't ship the merchandise. Look up the address and phone number of any local orders in the phone book. If the address and phone number check out, but you still have doubts, ship the merchandise AOD, Acknowledgement of Delivery, or certified mail. That way, you get a signature back that may help you find your bank if the customer has signed but claims to never have received the merchandise. Hold on to a signed sales slip and orders for at least a year. Send a reminder letter to people when you ship an item, telling them the item has been shipped and when they are expect it to appear on their bill. This type of letter can reduce complaints and chargebacks from people who simply forgot what they ordered or from whom. How does a chargeback differ from a return from a bank's point of view? A customer who wants to return something goes to the merchant, and the merchant issues a credit. A chargeback is when the customer gets satisfaction, or when can't get satisfaction, or when there has been unauthorized use of the account, and the customer complains that the credit card company. The credit card company then refunds the money to the customer, and in turn has to get the money back from the merchant. Too many chargebacks could cause a merchant to lose merchant status. A friend told me he has a fulfillment service that lets him use their 800 number and this merchant account to take customer orders. Is this okay to do so? To do. If the company is a legit fulfillment service and stocks and ship merchants for you, the benefit of their order taking services and your ability to give your customers the option of paying with a credit card may be worthwhile if you can afford the cost. If the company is going to take orders, bill the customers under their name, and then send the orders to you to fill, your best bet would be contact someone in authority at the card issuer or merchant bank and make sure that the company is authorized to process your charges. A salesperson told me people are starting to use their automatic teller machine, the ATM cards, like credit cards, and that if I can't get merchant status from my home business, I should get the equipment to accept ATM card transactions. It's just true. ATM cards are starting to be used as debit cards, as opposite to credit cards, to purchase goods and services. What happens when someone uses one of these cards is the money for a purchase is withdrawn, debited electronically from their account at the time of the purchase and transferred to a merchant account. Due to the immediate of the transaction, the ATM card are used to substitute for cash, rather than allowing the customer to postpone paying for the purchase until the end of the month or later, as they would with a conventional credit card. Whether or not ATM cards will catch on among customers as an alternate as to paying for goods and services with cash remain to be seen. But whether they do or not, being able to accept an ATM card is not likely to be an adequate substitute to being able to accept charge cards, since many people who use charge cards do so because they can delay payment or because they know the charge card company will refund their money if they have a problem with the merchandise that can't be resolved with the merchant. What kinds of charges are associated with the use of credit cards? Merchants are usually charged a flat fee for each transaction, usually in the neighborhood of 10 to 50 cents, and usually do not have discount fees, since there is no loan made as there is in effect with a traditional charge purchase. There are fewer restrictions on the use of these cards. On the minus side, for credit holders, the card holder is responsible for the first $500 in losses. If someone steals their card and discovers what the personal identification number is, the PIN number is, credit card holders are only liable for the first $50.